Good afternoon and welcome to a Nolan Business Solutions webinar based on NetSuite, Multibook and Advanced Revenue. My name is Thomas Elliott, or Tom Elliott, and I will be taking you through an overview of both Multibook and Advanced Revenue over the next half an hour or so in NetSuite. I'll be giving a little bit of an overview, just a few highlights of it, and then I'll show you some examples of both Multibook and Advanced Revenue recognition in NetSuite. Okay, so yeah, just a high-level agenda. We'll do an overview of Multibook. Then we'll have a look at how Multibook can be set up in NetSuite and a few examples of cases where Multibook can be used. Then we'll do a little bit of an overview of Advanced Revenue recognition. Again, we'll see a use case of how Advanced Revenue recognition might be used in NetSuite. And actually, at the end, when we go through this, we'll go through how Multibook and Advanced Revenue recognition can actually work together. So they are separate things in NetSuite. You can have just Multibook enabled and you can just have Advanced Revenue enabled, but you can have both enabled and they can actually work together. So we'll be showing how that can work together in NetSuite. Okay, so just a high-level overview, what is Multibook? So as you can see, basically, as standard in NetSuite, you only have one book. And when you post a transaction, it posts just one book in NetSuite. But what Multibook enables you to have is to maintain and report on multiple sets of financial books within NetSuite. So in total, you can have 5 books, so that's the maximum amount. And 5 books includes the primary book, which is your main book. So if you've already got NetSuite and then you decide that you have a case where you'd like to use Multibook, and you go through the process of getting it enabled through NetSuite, your existing book will come with primary book, and then you can have 4 other additional books. So a few examples of cases where multiple book accounting books might be needed in NetSuite is one, you might need to run accounting in 2 different currencies, so US dollars for consolidation purposes, but local currency for local filings. You might want to post transactions to 2 different accounts in different books, or you might want to amortize expenses differently across the books, or to recognize revenue differently across books. And this is the one we'll see where it's actually linked with Advanced Revenue recognition. So all those 4 cases are 4 examples where you might want to use Multibook, and we'll actually be coming on to looking at those cases in NetSuite shortly. So just before we go into NetSuite to have a look at Multibook, just want to highlight a few limitations of Multibook. So this, as it says here, this isn't an extensive list, and Multibook is very powerful, but it's not suitable in every scenario. So as I previously mentioned, if you want to have Multibook enabled, you have to go through a process, you fill out a questionnaire, it gets reviewed by a NetSuite team, who then agree whether or not that Multibook is a suitable feature for your company. It then usually gets enabled in a sandbox account where it can then be set up and tested before it then gets enabled in the main book. So a few limitations are, firstly, one world account is required. So even if at the moment you only have one subsidiary, you do not have a NetSuite one world account, you have to have a one world account to enable Multibook. A maximum of 5 books is including the primary book. As I said, it's not possible to have more than 5 books. So accounts are not book specific. So by this I mean that what you might want to do is post to one account in one book but not the other book. But in your chart of accounts, the account must exist in all accounts. Whether or not it must exist within all books. Whether or not you use it across books is a different matter, but it has to exist for all books, I should say. Turning on Multibook does not resolve all localization requirements. So one use case is you have to have local requirements for GAAP reporting. So you enable a secondary book for this. It's not automatically going to give you all your requirements, all your localization requirements, just because you set up a local GAAP book. You will have to actually set up the functionality to be able to produce the reports you need. You can't have book-specific subsidiary hierarchies. So those of you who have OneWorld or know what OneWorld is the NetSuite environment where you have more than one subsidiary or entity. So you will have a subsidiary hierarchy, and that hierarchy will exist across all books. You can't have one hierarchy in your main book and then a different subsidiary hierarchy in a secondary book, which you want to use for reporting purposes. It's not possible. It's one subsidiary hierarchy across all books. And also, it is not possible to post transactions to different segmentation values. So, for example, you might have departments set up in your NetSuite system, and in your main book, your transaction posts to the finance department. In a secondary book, you wouldn't be able to say, instead of posting for the finance department, I want it to post to the sales department. That's not possible. It will always post the same segment value, so class, department, location, etc., across all the books. So there's just a few limitations. There are obviously further limitations. It won't enable you to do everything that you possibly want to do, but here's just some of the more common limitations of Multibook. So as previously mentioned, there's a few use cases of Multibook. So I won't go too much detail again now, but you can see it on the screen. There's 3 different use cases I've already mentioned. And now what I'm going to do is I'm going to go into NetSuite and show you a little bit first about the setup of Multibook, and then also show you these 3 use cases of Multibook. And it's worth noting that different companies might use 1 or 2 features of Multibook. You don't have to have you don't have to use all the different cases in Multibook. You might only want to use it to amortize expenses differently across your books. So you could enable Multibook and only enable those features. So now I'm going to jump into NetSuite environment, and within this environment I have Multibook enabled. So if I just go to set up company and enable features, once Multibook is enabled by NetSuite, so you've gone through the process of getting it approved for your company, under the accounting section you have a new set of features enabled to your system. So they are Multibook accounting, chart of accounts mapping, foreign currency, revenue and expense management, and extended accounting period close process. So there's 5 different options. The first one is just enable Multibook accounting, and then the other 4 are, depending on what you want to use Multibook accounting for, are dependent on which features you might enable. It is worth noting that once you turn on any of these features and save it, you can't turn it back off. So you can't say, I want to test out Multibook accounting, get it enabled, and then realize you don't like it. You won't be able to then turn Multibook accounting off in your NetSuite system, which is why NetSuite is always recommended to do it in a sandbox first, so you can actually check it does work as you expect it to work before you actually enable it in your live account. So once Multibook accounting has been enabled and you've set up what you want Multibook to be able to do, you can create multiple books. So a new section is added under setup and accounting for accounting books. So if I go there at the moment, I can see I've got 5 accounting books. Now I'm not going to go into too much detail about all the different types of books, but this is to show you I've got the maximum number of books available. You can see that in the 3rd column it says primary, and only one of your books obviously can be your primary book, and the status is active or pending. So active means that transactions will actually be posted to that book. Pending means you're still in the process of setting up that book and you won't actually have any transactions posting into the book. So if I just look at my primary accounting book, for example, first of all, and click on edit, you will see that this is the primary accounting book. It has been ticked as the primary one and it is available to all these subsidiaries. Now, as it's the primary book, and it was the initial book, you cannot change it. So you can't make another book your primary accounting book. Once it's been set up as the primary book, that is that. And if you've already got NetSuite and you're already using the system, and then you set up enable Multibook and use other books, your existing book will become your primary accounting book. And the only thing I can change here, there's a few options on the right, I'm not going to go into detail of that, but the only thing I can really change at this point is the name of the book. If I go back and look at another book, so for example my statutory book, if I click on edit, you'll see there's a lot more things I can change. So the name, for example, as before. But what you can actually choose is, although say you've got 10 subsidiaries set up, your additional books don't have to be available across all subsidiaries. You can select which subsidiaries those books apply to. So in this case, in my statutory book, I can see it's set up to include my Canada subsidiary, and then the rest of the rounds here, the APAC ones, is not including the USA or Mexico. Also, once I've selected the subsidiaries I want it to include, I can then, if I turn on the feature to have different currencies, I can set the base currency, so that's going to be the base currency of this subsidiary, of the subsidiary in this book, and then the primary book base currency is the base currency of the subsidiary, and that is actually when you set up the subsidiary itself, excluding the multi-book, you set obviously what country it relates to and the primary currency of that book, of that subsidiary. So what the feature of having run accounting in 2 different currencies enables you to do is to post transactions, the same transaction in 2 different currencies. So just to note here, you can see some information is grayed out and some it's not. So for example, EMEA, the primary book case currency is British pound, and then the base currency is currently also British pound. I can currently change this, and that just means I haven't posted a transaction to the EMEA subsidiary in this book. But whereas the UK is grayed out for US dollars, so transactions already posted, I can't then go in and change the base currency for this book. So this is a good example where I've got different currencies for the same subsidiaries between the books. So the one I'm interested in at the moment is the UK subsidiary. My primary book base currency is British pounds, as you'd expect, but for this book, my statutory book, the base currency is in US dollars. So what this means is when I post a transaction against the UK subsidiary, in my primary book, it's going to post in GBP, but in my secondary book, the statutory book, it's going to post in US dollars. So to see an example of this, I'm going to create just a sales invoice. I'm going to just select my customer. So I'll make sure they're in the UK subsidiary. As you can see, the company's come up UK there. And I'm going to post, I'm going to select my item. And it's already pulled through an amount of £72,000. And you can see here, this is the currency and the exchange rates used. Once you enable multi-book, you can see I have an extra tab is added to the transactions called accounting books. If I click on that, it will show any other accounting books where this subsidiary is set up in. So although I've got I previously had 5 accounting books, the UK subsidiary is only added to one other additional book, which is this statutory book. Again, it shows you my base currency, which is US dollars, which I can see has been set up here. And it pulls through the exchange rate. So that will be the current currency exchange rate between GBP and US dollars. But I could change it on this transaction here if I wanted it to be something different. I'm not going to add anything else to my invoice at the moment. I'm going to leave it as it is. And if I save my invoice, what happens now is I can view my GL impact. So as you can currently in NetSuite, for each transaction, you can view the GL impact. What happens when you enable multi-book is you can view the GL impact for each transaction per the different books. So if I go to view my GL impact, it pulls through my GL impact, and you can see here now this is where you've got a drop down between your different books. So as it stands here, my primary accounting book, I am accrediting my deferred revenue account and debiting my accounts receivable account, and you can see the amount there, 72,000 in British pounds. On the drop down, it's going to show all books. If I go to a book that doesn't have this subsidiary set up in, for example, IFRS, it will show no search results match your criteria. But if I go to the statutory books, the other book, it posts exactly the same accounts as it did for the primary book, but you can see now it's posting in US dollars. Okay, so now if I went to view a report, so for example, if I just view my balance sheet So, sorry, reports, financial, actually it's assuming my trial balance. So when it comes to reporting now, you now have, so this is the standard trial balance in NetSuite. You will see that you now have an additional tab here for accounting book. So just worth noting here as well, it is not possible on one report to see accounting book results side by side. So I can't have my debit and credits for my primary accounting book and then debit and credits for a secondary book. You can only ever view one accounting book on one report. So at the moment I'm seeing my primary accounting book. So if I choose my UK subsidiary and click refresh, I see my trial balance up to April 27 for the UK subsidiary, and you can see it's all in pounds. If I change my book to my statutory book and refresh, it's now all in US dollars, because I've said in my secondary book, my statutory book, that the base currency is US dollars. So now I can produce my UK subsidiary figures in both US dollars and in GBP. Okay, so that's one example of where I might want to use Multibook. If you need to do not consolidated reporting, but you need to report the same subsidiary in different currencies for different reporting needs. A second use case of where you might use Multibook is you actually want to post one transaction to two different accounts. So a second feature you can enable is different account postings. So I'll just close down my tabs. So now under setup and accounting, as well as my accounting books option here, I have additional two mappings here where I can do global account mappings and item account mappings. Now I'm going to explain the difference between the two as I go along, but initially I'm going to look at item account mappings. So what item account mappings enables you to do is for transactions where the account is defined on an item. So by standard, when you post a invoice, for example, the items on the invoice will be set up to say which sales account to be posted to, or which deferred revenue accounts to post to, or if you purchase them, it will say which expense or cost accounts they should post to. So any transactions that are using items to define the account, you can set up item account mappings. Now I can see you've got a few set up here. The one I'm looking at the moment is for this UK subsidiary, and I'm going to actually click on edit here. What I can do, what item accounts mappings enables you to do is to say, normally if I posted a transaction that has an item where the source account for deferred revenue is 2730, in a secondary book, such as my statutory accounting book, for the UK subsidiary, instead of posting my results into 2730, post to 041-9. So it's given me an option to post in a different book to a different account. So this again is something you might need for statutory or IFRS reporting, where for your standard day-to-day reports, your management reports, you just normally post it into one account. But actually for a specific requirement, you actually need the results to go into a different account. And you can set up account mappings to enable you to do that. So a few things to note. The item account mappings is not per item. You set it up per item type. So for example, if you click on the drop down here, you've got your different options. The account types, for example, deferred revenue, income, expense, and then you select the source account so that any items that have my source account set as 2730 for my item type deferred revenue, this rule will apply. You don't pick per item, you pick per source account, per item account type. And also you need to set it up per accounting book and per subsidiary, as you can see here. So if I just have a look at an item that actually has some of that set up, so if I just go to, just going to search one of my items. So if I go to the accounting tab, I can see that this service for sale item, CA1 implementation services, the income account is 4030, and the third revenue account is 2730, which is my source account for this item mapping, account mapping rule. Just to note, whenever I post an invoice at the moment, it's going to post to deferred revenue account. That's just related to the excuse me, sorry, the advanced revenue features that I've got set up in this account. The same features apply if I didn't have that information set up, and it will just normally post to your income account. So now if I create another invoice, so again I'm just going to create a sales invoice. So I'm just going to select the same customer again. So and then select my, just check something, sorry, yep, and then select my item. So the item I used was CA1. Click on OK and save the invoice. So again, now I'm going to go and look at the GL impact. So for my main book, primary accounting book, it posts to account 2730. But if I go to my statutory book, it posts to that 041-9 account. So again, you can see that by setting up an item account mapping rule, you can say between my different books, actually the same transaction posts to a different account. And all you've got to do obviously is set it up once for all the rules you need, and then every time you post a transaction that uses that item with that source account, it will post to that destination account instead. So the same transaction in my primary accounting book has posted to 2730, but my statutory book has posted to 0419. So that's item account mappings, and there's also, as I mentioned before, global account mapping. So this is where instead of the item setting the account, on the transaction itself you set the account. So a couple of examples might be a journal. So when you create a journal, you select which accounts you're debiting, crediting, or for example a bill, vendor invoice. There you might be, instead of actually saying you're paying the supplier for a particular item you've got set up in your account, you actually just say I'm paying the supplier an information relating to this GL account. So that's the example we're going to go through now. So if I look at another example, this time it's for the global accounts mapping. So it's very similar, so for this time obviously you don't have the item categories. You just say the source date, sorry, my source account and my destination account. Again, then you select it per book and per subsidiary. I forgot to also mention as well, you need to set an effective date. So this is the start date of where this account mapping will apply. And you can also set an end date if you only want it to apply between a certain range of time. But if you don't set an end date, it will apply from your effective date going forwards. So if I go to create a vendor bill, or a vendor invoice, sorry, go to transactions, payables, enter a bill. And this time I'm just going to select my vendor. And as you can see, the global account mapping was for my Indian subsidiary. So this vendor is across subsidiaries, so I just need to make sure I select India. And then I just need to select my account. And then I just enter an amount, so I was going to say 1500. And now just save the bill. Okay. So now if I go to actions and GL impact, you can see for the primary accounting book, it's to my account 5,100. But if I go to my statutory book, it's gone to account 062-8. And that is because my global account mapping, I've said instead of, for my secondary book, my statutory book, instead of posting to 5100, post to 062-8. So that is looking at where you can have different account mappings, both through items and global account mappings. A third case, finally, to show you for Multibook, is you might want to amortize your expenses differently across books. So an example is you might want to, over the term of a contract, you might want to expense it across the term of contract in one book, for example, if it was for US GAAP, but in another book, you need to expense the full amount straight away. So for this, you just need to set up amortization schedules. So if I go to lists, accounting, and then I can select where I can set up my schedules. Sorry, not schedules, I want to set up my templates. And if I look at my prepaid rent ones, that's the one I want to look at for now. I'm saying that basically the deferral account is 1320 prepaid expenses, and the target account is 6200, my rent expenses, and I want to amortize it over 6 months. Excuse me, sorry. So if I go to look at an existing bill, so if I just go to list my bills, just wait for that to load. And I can look at my existing one. So I've already created a bill, which will actually show how a schedule can be varied between the different books. So this is my bill. Okay, so it's a bill for, again, for the same supplier. The item is rent. I just got an item for rent, and I've got total amount of 1200. So if I go to view the GL impact, I can see that because it's in India, it's Indian rupees, and the account here is administrative expenses, rent expense. If I go back to my item, and then, sorry, back to my transaction, if I go to the item, I can show under my accounting, I can see I've got my expense account and I've got my deferred expense account. On the transaction itself, I've got an option to update amortization. If I click on that, it'll basically give me an option of what to do. So you can see my 2 different books. So that's related to my vendor, relates to my subsidiary in India, and that's in 2 books. I've then got an option, 2 additional books, I should say, apologies. This is outside the main book. For my statutory book, I can say I've already set up a schedule to say the amortization schedule is for prepaid rent. The start period is today, the date of the transaction, and it's going to last 6 months, so the end of the amortization is going to be the 30th of September. I have the option, so I should say on the item itself, I've set up that schedule here, so you can see that it's got a tab for revenue recognition and amortization. For statutory book, I've said prepaid rent as my amortization template, which is what I previously showed you here. So it just means I want to amortize my expenses over a period of 6 months. So on the actual, sorry, apologies, jumping around here. On here, I could change it if I wanted to use a different template. Then I can actually post my transactions. So if I go to transactions, financial, and then create amortization journal entries. So let me just find that. Here you can see that I have, for the Indian subsidiary, for my statutory book, I have 1 schedule already set up, including the template rents bill, and the amount here will be 7,142, and that's for the 6 months, a sixth of my total amount. And then I can create the journal entry itself. And what it does is it creates a book-specific journal. Now, what a book-specific journal is it's the same as a standard journal entry you have in NetSuite. However, it enables you to create a journal entry for just one of your books. So you can see here that it's called book-specific journal entry, and it only applies to the statutory book. Okay. If I go back to update amortization, sorry, if I go back to creating a journal, so if I went to go to create a new amortization journal entry, it's now gone for India for the statutory books. I've already created it. But if I go to my primary accounting book, there is also nothing to recognize because I've told it to recognize the revenue straight away. So if I go back to my bill and go back to my actions GL impact, for the primary accounting book, it's in 6200, but in my statutory book, it's in 1320 prepaid expenses. And then what the journal actually has done itself, suppose go back to my journal, it's moved 7142.86 from prepaid expenses to rent expenses. And then when it came to next month, you post your next month's journal. So if I went back to transactions final and transactions financial and create amortization journal entries and go to my statutory book and go to May, you can see I've got my next revenue recognition, sorry, not next revenue recognition, next amortization journal entry I can post. Okay, so that's a few examples of Multibook on its own. What I'm doing now is give a bit of an overview of advanced revenue recognition and just show you an example or two of those in NetSuite. So what is advanced revenue management? So the advanced revenue management functionality basically automates revenue forecasting, allocation, and recognition, reclassification, and auditing through a rule-based event framework. So it is compliant with the ASC 606 revenue standard for those of you who know what it is. So what it enables you to do is defer revenue across multiple periods according to the rules you configure. And as you can see there, it supports fair-based values based on vendor-specific objective evidence, best estimate of selling price, and third-party evidence. And then the fair values are used to determine the revenue allocation ratios for multi-element transactions. So there's actually a lot you can do with revenue recognition, advanced revenue management, about when and how you want to recognize your revenue. So a couple of cases that may be of use to you is, firstly, you may want to recognize revenue spread over the course of the year when just one invoice is created. So you make a sale to a customer, you create a sales order, you create an invoice. The invoice is for £12,000, but instead of recognizing £12,000 at that month when you create the invoice, you want to recognize £1,000 in each month over the course of the year. Advanced revenue management allows you to do that. And the link with Multibook actually enables you to recognize revenue differently between the books. So in one book, you can say, in this example, recognize all revenue when I receive the invoice, and my other book, recognize revenue across the course of the year. So this is where advanced revenue can link in with Multibook. So I'm going to jump back into NetSuite and show you some of the things that could be enabled for set up revenue recognition rules. So I'm just going to close my extra tabs. So if I go to list accounting, revenue recognition rules. So rules are what enable you to say how you want to recognize your revenue. So here's a few that have already been set up. So a few of them I'm going to look at here. The one I'm going to be using today is this demo 12 periods one. So if I look into the revenue, now obviously there's a lot of information here and we're not going to go into all the detail, but over high level, what I've told the system to do is, for this rule, any items associated to this rule, I want to recognize my revenue over 12 periods and straight line by even periods. So what that means is, say you receive an invoice for £12,000, I want to recognize a 12th of that in each month evenly starting in that period. Now the evenly thing is important because well, once you've used it, you can't change it, so let's just cancel out of that. If I went to create a new one, the recognition method, you can see you've got other examples, so straight line, and then you can do prorate first and last period, use exact days, or prorate first and last period rate. So there's few options if you don't want to recognize it evenly just on the 12 months, if you want to use based on the exact days, because obviously you might receive an invoice halfway through a month. So do you want to recognize the full amount of revenue in that month, or do you only want to recognize half of a month's revenue in that month. Okay. So recognition period. So you can say how long you want to recognize the revenue over. So this is one rule I set up, and then actually it's an item level where you set how you want to recognize your revenue. So if I go to an item, so just view a few of my items. If I view this item here, what you've got on the revenue recognition, once revenue recognition has been enabled in your account, you've got this sub-tab here. And what it enables you to do is to tell NetSuite per item how you want to recognize your revenue. So for this item, I've said my revenue recognition rule is this demo 12 period. So I want, whenever I create a sale and an invoice for this item, I want, instead of recognizing all my revenue at the point the invoice is created, I want to recognize it spread evenly over 12 periods. Now, if you just had revenue recognition, you'd have this information here. If you've also got Multibook, which we have in this account, you then have an extra section at the bottom added, which enables you to have different revenue recognition rules per accounting book. So at the moment, I've just said to use for my primary book, there's information you set here, use demo 12 periods, and then you can, and then for this item, it's going to be the same across all books. So let's see this in action. So I've got a sales order that I can create, I can turn into an invoice to show it. So if I just view my existing sales orders, so I'm look at this one here, 71, pending billing. So a sales order was created for this this item here for £60,000. So at this point I can just say next bill. So I'm going to create my invoice for this sales order. Okay. I'm not going to change the information, but standard you could change the information if you wanted to, and click on save. So now if I go to actions and GL impact, my GL impact between the books is going to differ only in the fact that I'm using my UK subsidiary, which means in my primary accounting book is going to be in pounds, and in my statutory book it's going to be in US dollars. So here, my primary accounting book, I can see that it's posted to deferred revenue at £60,000, and if I go to my statutory book, it's $99,000. Otherwise, it's posting to this deferred revenue account. So nothing gets posted to directly to my standard revenue account. Now, if I compare that to another invoice that already exists, so if I look at list my invoices, and if I look at invoice number 88, so this invoice was created for a different item, which was AA3. Now, if I open this item here and go to revenue recognition, I can see although it's set up with a revenue recognition rule, this tick box is ticked, which says direct revenue posting. So this means for this item, I don't want to have any deferred revenue, or I want to recognize my revenue immediately. And what it means, so when I have my transaction, my invoice, and I go to GL impact, you can see the account here is my revenue account. So go back to the item, I have my income account, 4020, and it's recognized straight away on my invoice to 4020. There's nothing that's gone to my balance sheet into deferred revenue. It's going to hit my P&L straight away as soon as the invoice was created. Let's just close out those. But for this invoice, I'm using this item, which has a deferred revenue rule set up. So it's gone to my deferred revenue account. To actually post the information from the deferred revenue account into my P&L, into my revenue account, excuse me, sorry, I'm going to run a new type of journal, which is a create revenue recognition journal. I'll just create a shortcut on my homepage. So if I go to here, what it then shows up is any existing plans that you've got set up. So I've got two. There's one here for revenue arrangement 33 and one for revenue arrangement 18. So revenue arrangements get created on the back of plans. If I go to my invoice and go to, actually sorry, instead of the invoice, if I go back to the sales order, it will tell you the related records, the revenue arrangement it was created. So this is the one I've just created, and the revenue arrangement is number 18. Sorry, number 19 for my statutory book. Sorry, that's the arrangement, not the plan. So yeah, the revenue arrangement 18. So here you can see I've got £5,000. So if I go back to my sales order, and then actually if I just go on to the invoice, in total it was £60,000. I've said recognise the revenue evenly over 12 periods. So my arrangement is for £5,000. And if I went to May, there'd be another one for £5,000. So if I go back to April, to actually recognise my revenue in my P&L, same as I did for the amortization, you say you pick the one you want to do, and you select create journal entries. So just refresh this process. So just go back. Okay, because there was two there, sorry, it's posted both in one journal, but this was from a different one, but you can see it's posted my £5,000 from my deferred revenue account into my operating revenue account. So it's moved from the balance sheet to the P&L. And if I go back here and do the same thing, but now for my statutory book, it would be exactly the same thing, except for this time obviously it's going to show the information in US dollar amount rather than the pound amount. So I'm just going to create that journal as well, and that will be created in NetSuite. So all I've done here is said that when I sell this item, instead of recognizing revenue straight away, I'm going to recognize it evenly over 12 periods, and it's exactly the same between the different accounting books. However, what you can do is have different rules between different accounting books. So if I go back to view my sales orders, let's close out everything I've got open. So view this sales order. This time I'm selling a different item. And if I just open the item itself up and go to revenue recognition, you can see this time for the primary book I've got a different rule that says default one-time direct posting. So in essence I'm saying I want to recognize the revenue as a one-off. But for my statutory book I've said use the previous rule I had, so recognize it over 12 periods. So the rest of the process is exactly the same how we're actually going to recognize the revenue, but all it means is in my primary book I'm going to recognize my sales order revenue for 10,800 straight away within 1 month, but for my secondary book, my statutory book, I'm going to recognize that over the period of 12 months. So if I create my bill, sorry, my invoice, it's going to save it as it is. And now I'm going to go back to my home page, go to the create revenue recognition journal entry, and you can see statutory book here. I've got one revenue arrangement for just under £1,500. And if I go to my primary accounting book, you can see I've got one revenue arrangement for the full £10,800 because I've said I want to recognise the revenue in my primary book, the full amount in 1 month. So for April 2017, it's going to recognise the full amount, 10,800 in 1 month. Whereas for May, it's not going to recognise anything within that, within this schedule, sorry, within this arrangement for this invoice because it's all being recognised in 1 month. Whereas if I change my statutory book again, it's only got a 1/12 of the amount to be recognized, because it's still going to recognize a 1/12 of it over the course of the coming year. So if I just go back to primary accounting book and create the journal entry, just while I'm doing that, I'll go back to home and just post it for the statute book as well. And if I just refresh that, so it's done 2 there. So you can see I've got one journal here. That's, again, it's a book specific journal to the UK subsidiary for my statute book for just under £1,500, and then for this book specific journal for my primary accounting book, the full £10,800. So really it's a good example of where multi-book and advanced revenue recognition link in, because you can recognize revenue differently for the same transaction between 2 different books for different rules. So as I said, shown you here, my primary book, I want to recognize the full amount, but for my statute book, I need to recognize, I only have one invoice, but then I need to recognize the revenue over the course of a year. So thank you very much for listening to my presentation on multi-book and advanced revenue. Appreciate it went on longer than half an hour, but I just wanted to try and explain as much as possible I can. I'll stay on the line if there's any questions. I'll try and respond to them now. If I can't respond to them now, we'll get back to you with the answers. If you don't have any questions now, but you do think in the future, please send an email to sales@nolanbusinesssolutions.com, and we will do our very best to answer the questions as soon as possible. So I'll stay on the line for a couple of minutes. If I don't hear anything, thank you very much for listening, and we look forward to hearing from you soon.